a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Decided. President Trump says he's picked his nominee to succeed Fed Chair Jerome Powell and expects that nominee will deliver rate cuts. Risk pullback. Uncertainties around the next Fed chief, a crypto slump and a raft of data coming before the end of the year, all keeping investors nervous at the start of December. And US and Ukrainian negotiators say they had productive talks for a peace deal. Special envoy Steve Witkoff heads to Russia this week. So let's take a look at this market because it does appear that we are headed into December with fragile sentiment. We did eke out a gain for the S&P 500 of 0.1% in November. Not so for the Nasdaq 100 though. That was down 1.6 for the month. So obviously a lot more fragility around AI, around cryptocurrencies and everything tech related. And we're seeing that again today with the S&P futures pointing to a decline of 0.6%, more than that for Nasdaq 100 and Russell 2000. Of course, this next Fed chief, will it be Kevin Hassett? Will it be somebody else? And what happens next week at the Fed meeting? These are all questions swirling in the market's mind. The bond universe, as you can see, haven't moved too much. We're up 3 basis points there on the 30-year yield, up a little bit on the 10-year yield, and the same for the 2-year yield. So just a little bit of money coming out of Treasuries. It's coming out of a lot of asset classes. Let's take a look at commodities as well, because if you look at Bitcoin, we're back down to 86,000. Now, we traded well above 90,000 for much of last week, so that is clearly a lot of volatility in Bitcoin. Crude is putting on a couple of percentage points after OPEC Plus said it wasn't going to add back in production. And as you can see, Dr. Copper there, not too much movement to start this trading week. So we're going to answer some of those questions throughout the next hour. But first, let's get to some individual stock movers. And for that, we'll go to London and Chloe Melly.
Good morning, Bonnie. We are seeing some weakness across those crypto-exposed stocks today as the Bitcoin prices continue to slide. So this latest drop is due to China's central bank saying on Saturday that the risks of speculation and hype surrounding virtual currencies were coming back, and therefore that it would have to crack down on some of those illegal activities that come from that. And therefore we are seeing weakness across the board there with Coinbase, Mara, Strategy and Bitmine, all of them down in pre-market trading. Moving on to Canadian Solar, which is a solar panel manufacturer, which is also on the move this morning, but it is up after saying that it would be transferring its Chinese assets to Canadian ownership to avoid that growing scrutiny of Chinese imports into the US. And finally, Disney is also up this morning after Zootopia 2 that had a really strong debut in China. This was the second biggest ever opening for a foreign film in China and really confirms that this will be a key market going forward for Disney, and we are up 0.6% this morning.
So a little green on the screen. Chloe, thank you so much. That is Chloe Melly there in London. And coming up this hour, we're going to catch up with Kathy Jones of Charles Schwab on the market risks around the changes at the Fed next year. But first, let's look at the market moves as we kick off December. Stock futures lower after the S&P 500 did eke out a 7th consecutive monthly gain in November. Bloomberg's Morwenna Coniam joins us now. Morwenna, we're definitely looking very fragile. A lot of questions still to be answered in the month of December. Is it possible that we could still have a Santa Claus rally just on technicals?
Well, as you say, we did see the S&P, ending up in the green at the end of November, but that wasn't the case for the Nasdaq. And I think a lot of this uncertainty that has been driving equities lower, in recent weeks and months has been due to that concern over AI. And so far that does seem to be continuing into December. We've got futures pointing lower this morning and following sell-off across Europe and Asia as well. So we are looking at a very risk-off mood as we start December. However, we've seen before that sometimes we get a bit of a rebound, particularly if there's any catalysts coming from the tech sector just to sort of revive that sentiment. We also do, of course, have the likelihood of a Fed rate cut this month, and that could be really crucial for supporting equities into the end of the year. We've also got a lot of US data coming out, which could support the case for a rate cut further. I think that will be critical, especially if we're actually, once we do know who the Fed chair is, whether that then gives us any indication of actually what we should be expecting into next year, and therefore what equity markets are reacting to in terms of what's priced in there.
You would think if it's going to be a dovish Fed chair next year that perhaps equities would rally, but is there a concern here that a dovish Fed chair might add to inflation?
Yes, absolutely. And I think it depends whether, a dovish move from the Fed is actually based on economic need or whether it's political pressure there as well. Because if it turns out that actually, where things are isn't quite as weak as perhaps the Fed rate is implying, then that could lead to, rate cuts that actually are inflationary. And that could then have, further problems down the line, and we could see a pullback in that progress for the Fed, further into the year, and that could weigh negatively on equities.
Morwenna, thank you so much. That is Morwenna Conium there for us. Over the weekend in Florida, U.S. and Ukraine continued talks on a peace deal.
It's not just about the terms that ends fighting. It's about also the terms that set up Ukraine for long-term prosperity. I thought we started laying the groundwork for that, most certainly in Geneva. I think we continued that work in our communications throughout the week. I think we built on that again today, but there's more work to be done. This is delicate, it's complicated, there are a lot of moving parts, and obviously there's another party involved here that'll have to be a part of the equation, and that'll continue later this week when Mr. Witkoff travels to Moscow.
Well, joining us now is Bloomberg's Oliver Crook. Marco Rubio sounding optimistic there. Oliver, what is the latest?
Yeah, that's right. We're getting progress, they say, in these negotiations that were held over the weekend in Florida by the Ukrainian delegation and headed by the U.S. side, Marco Rubio, from the Secretary of State of the United States, saying that the progress has been made, but giving very little detail in terms of where they are in terms of bridging some of the biggest issues that still exist in this 19-point proposal. We understand that that is now the framework they are working from, that 19-point sort of living document after that 28-point proposal from a week and a half ago, which really shocked the diplomatic community here in Europe, seen as very favorable towards the Russian. But the truth of the matter is, at this stage, it is very hard to know what progress they've made, on some of the stickiest issues, whether it's territorial concessions, security guarantees going forward. So the focus this week will squarely be on diplomacy. Today, Volodymyr Zelensky, president of Ukraine, will be in Paris with Emmanuel Macron. We have European defense ministers assembled right here in Brussels, right behind me, having their meetings. And then on Wednesday, Marco Rubio actually flies here to Brussels to talk to NATO foreign ministers. We understand that Steve Witkoff will make his way over to Russia. We understand that those meetings could be held in the afternoon of Tuesday, tomorrow, with Vladimir Putin. That being said, Putin is still planning a visit to India this week. Does that sound like a leader of a nation that is going to potentially be in crunch talk to end a war? We are not terribly sure about that. Potentially, that is something that he's trying to put out as something that maybe we're not that close to getting a deal from the Russian perspective.
Exactly. I have to ask you how Macron can help if the U.S. is perhaps a little bit more in Russia's camp at the moment.
Well, I think that's the difficulty, is that Emmanuel Macron has been a great supporter of Ukraine. He's been very sort of positive in terms of the rhetoric. But as you know, he's so weak at home in terms of what he can deliver domestically, to say nothing of the fact that the main issue and the way that the Europeans can support Ukraine the most is by touching these Russian assets that are currently being held in Belgium. That reparation loan of 140 billion euros worth of assets that could potentially be set up as a loan to the Ukrainians. Over the last few days, we've heard from the Belgian side of this. They're the ones that really hold the keys here. They say that they are really not ready to make that move. And in fact, the fact that there are peace negotiations would potentially, from their perspective, say that actually we should hold off on those things. And with that, on top of it, you have Viktor Orban spending this weekend in Moscow alongside Vladimir Putin, trying to secure oil and gas. That, again, is sending a fairly negative signal from the European side. One positive silver lining, one piece of news we just got from the Dutch defense minister: they committed €250 million to the Pearl program. That's weapons for Ukraine. So at least some concrete progress here from the Europeans delivering for the Ukrainians.
Oliver, thank you so much. We'll hear more from you on that defense ministers meeting today. Later on, that is Bloomberg Chief European Correspondent Oliver Crook. And in Washington, President Trump makes his Fed chair pick.
Fed chair, are you any closer on that right now?
I know who I'm going to pick. Yeah.
Ooh, tell us.
Kevin Hassett.
I'm not telling you.
Joining us now is Bloomberg's Suzanne Lynch. Suzanne, this is going to be a huge reveal. You know, markets and poly markets all think it's going to be Kevin Hassett. Do we know any more? Is it likely to be Kevin Hassett?
Well, all we heard from the president there yesterday was that he has indeed made his pick. but he is still keeping his cards close to his chest on this. But yes, Vonnie, as you're saying there, we've reported here, Bloomberg, and of course elsewhere in the markets, etc., that people now believe that Kevin Hassett is best placed to succeed Jerome Powell as chair of the Federal Reserve. Now, Hassett himself was on the morning news round in the US on Sunday and himself was playing his cards close to his chest, not confirming that he had been tapped for this, but also saying that it was a positive sign that the markets had reacted positively to the fact that Donald Trump had made his decision. So read into that what you will. But yes, expecting that it may well be Kevin Hassett.
Elsewhere, Suzanne, I want to ask you about geopolitics because Trump has been downplaying the threat over Venezuelan airspace. So he sort of put out on Truth Social that everybody should avoid Venezuelan airspace, that it was effectively closed from a US perspective. What more do we know about his plans for Venezuela, or what might happen next?
Yeah, again, Donald Trump was playing down this language he used over the weekend about Venezuelan airspace being closed, which really caused jitters across the region, particularly obviously in Venezuela. He told reporters last night not to read too much into this effectively. I mean, what's interesting here is the reports that he had this phone call with Maduro. You know, what happened in that phone call, what was discussed, we don't know yet. But what we do know is that there's been a lot of US activity in that area. Obviously, that build-up in those waters near Venezuela. And I think the intentions of the United States are not just worrying Venezuela, but interestingly also causing some concern within Trump's own party. Some Republicans on the Hill, for example, you know, looking for answers, I think, about what's next in terms of Donald Trump's intentions in this area. But so far, we don't know the content of that phone call. We don't know exactly what is on the mind of Donald Trump. Mixed messages, I think it's fair to say, over the weekend from the president on this issue.
And just briefly, Suzanne, there's a lot going on internationally with the president at the moment. You know, he's been a little bit involved in the Honduras elections as well. And obviously, Ukraine is a big sticking point at the moment. What more do we know about, you know, NATO countries and how they're preparing for potentially, you know, defending the continent without the US?
Yeah, look, this is a key week for Ukraine, as we were hearing there from Oliver. You know, EU ministers are meeting today. We also have NATO minister of foreign ministers supposed to be meeting in Brussels on Wednesday. Will Marco Rubio, for example, the Secretary of State, attend that? I think that will be significant. See, does he, don't he? The reality for Europe is, at the moment, these talks between Witkoff and the Russians, Europeans are not at the table for that. In the meantime, they are trying to keep up that diplomacy, those links with Ukraine, to make sure that the Ukrainian and the European perspective are front and centre in any talk. So, for example, we're seeing President Zelensky visiting Emmanuel Macron today. He's then going on to Ireland. So we're seeing this continued diplomacy and interaction and engagement between the Ukrainian side and European partners as this parallel discussion, if you like, is happening between the United States and Russia.
Amazing, Suzanne. Thank you for bringing us up to speed this Monday morning. That is Bloomberg's Suzanne Lynch. Now, two other top stories trending on the terminal this morning. Bank of Japan Governor Kazuo Ueda sent the clearest hint yet that the BOJ board might raise interest rates soon. Traders see about a 76% chance of a hike this month, with the likelihood rising to around 94% for a move by January. Japanese government bonds slumped, with the two-year yield rising to its highest level since 2008. The BOJ meets December 19th. UK Prime Minister Keir Starmer plans to give a speech today defending Chancellor Rachel Reeves's £26 billion tax hiking budget. According to early excerpts provided by 10 Downing Street, Starmer will say that the budget reduced cost of living pressures and ensured economic stability. Italy's Borromeo family is listing a company that manages real estate sites, including a group of islands on Lake Maggiore. They are aiming to turn the area into a tourism and business hub to rival nearby Lake Como. The proceeds from the listings will be used to develop the area. It will debut trading on the Paris and Milan exchanges. Coming up, Airbus says most of its A320 jets have received software fixes after a weekend disruption. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Global airlines are beginning to report they've completed an Airbus software update that grounded more than half the global fleet over the weekend. The French plane maker says that the, quote, vast majority of its roughly 6,000 A320 jets have been modified. Bloomberg's managing editor for space and aviation, Benedict Camel, joins us now for more. Benny, it's a little concerning when a whole fleet needs to be very quickly and suddenly upgraded. What was the event that triggered the need for this software update?
So we got this announcement late on Friday evening. It was really a surprise to anyone, myself included, that this urgent software upgrade, in fact a revision to the previous version, was required. The story behind that is that there was an incident about a month ago whereby an aircraft that was traveling to the US suffered sort of an anomaly during flight. It pitched down without the pilot making any inputs, and then the engineers looked at this afterwards and realized that there had been some sort of solar ray infection, shall we say, of the system, and that the software had not responded correctly. So now the Airbus company and airlines are required to make this fix, and they did so over the weekend. A really frantic sort of rush to go back to the previous software version. Regulators said that this had to happen before the next regular flight of the plane. So 6,000 aircraft, that's more than the global fleet of this family in operation, required this upgrade over the weekend, and this morning we heard that the vast majority had in fact succeeded. Only about 100 planes left, so really a small number, and Airbus really avoiding a mass disruption here.
Do we know what might have happened if this hadn't come to light? I mean, it's a little bit not great for trust building, right? If a fault that's been there all along suddenly comes to light.
Yes, you're absolutely right, and there's lots of questions remaining, which might also explain why the stock is down somewhat today. Investors, I imagine, are a little bit spooked by this, as is the flying public. You never want software on an aircraft that doesn't respond in the way you want it to. Obviously, some people will be reminded of the cases on the Boeing 737 MAX aircraft a couple of years ago. Obviously, far more dramatic and ultimately catastrophic events there that led to 2 crashes. And Airbus being doubly careful here, very cautious, saying let's do these upgrades or these revisions to make sure that we have the redundancy and the safety built into the system. So really, in some ways, if you want to look at it positively, it speaks to sort of the caution in the industry that when there is something that doesn't look quite right, take a break, slow everything down, take the aircraft out of the system, and potentially face long delays, but you're doing so in order to get the system back up and running and rebuild the safety mechanisms. That's what happened over the weekend, and luckily for everyone involved, the fix seemed to be, by and large, fairly swift.
Yeah, but as you say, you know, it only came to light after something happened on a flying aircraft, right? It didn't come to light on the ground. So you have to ask yourself, does it mean anything for delivery targets? Does it have any implications for the company? And also for Boeing. Does Boeing potentially have to look into this problem too?
I mean, on Airbus itself, I would have said that if this had dragged on longer into the week or even into the year, the rest of the year, this could have had real implications for Airbus, because obviously it binds management attention, it binds engineering resources, so that could have potentially diverted the focus away from the all-crucial target, which is delivering aircraft, building aircraft, getting them out of the door. Airbus has an ambitious goal for this year, and they still had some ways to go on this. So with this crisis seemingly now averted, they can refocus on that. What it means for Boeing is less clear. Obviously, again, a company that's become very cautious in the last couple of years after these 2 accidents. And this is a company that is very slow now in the way, and very meticulous, slow in a positive way, very meticulous in the way that it builds its aircraft, and really a reminder that planes these days are complex interplay between hardware and software. And if there is something in the software that doesn't respond right, the industry generally likes to slow down, and Airbus is reminded that it's not just Boeing that can have these issues. It's a good reminder this is something that can happen to both aircraft manufacturers, and Airbus probably got a real scare of this last week when they came out with this announcement.
Well, as you say, thankfully it was discovered and now appears to be pretty fixed. Benedict Camel, thank you so much for joining. Coming up, top consultancies are freezing starting salaries as AI continues to disrupt the industry. More on that and a look at what else is making headlines in your front page news. That's next. This is Bloomberg. Time now for your front page news. First up, the New York Times leading with Honduras elections. Two conservative candidates virtually tied, far ahead of the governing left wing. A Trump-endorsed candidate, Nastria Asfura, is virtually tied with sportscaster Salvador Nasrallah. If Asfura wins, it'll signal a victory for President Trump. For months, the right-wing candidates have been drumming up fears about Honduras becoming the next Venezuela. Next up, on the Washington Post, President Trump says he has, quote, great confidence Defense Secretary Pete Hegseth did not give a spoken order to kill two remaining crew members on a U.S.-targeted boat in the Caribbean Sea in September. The Post reports that a special ops commander ordered a second strike to comply with a spoken order from Hegseth to, quote, kill everyone. Trump says he believes Hegseth's account of the attack 100%. And finally, the Financial Times saying top consultancies have frozen starting salaries for a third consecutive year as AI reshapes the industry. The FT cites a report that compensation packages for MBA graduates at McKinsey, BCG, Bain could be between $270,000 and $285,000. The three firms declined to comment. This is Bloomberg. It is 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Decided. President Trump says he's picked his nominee to succeed Fed Chair Jerome Powell and expects that nominee will deliver rate cuts. Risk pullback. Uncertainties around the next Fed chief, a crypto slump, a raft of data coming before year-end, all keeping investors nervous at the start of December. And U.S. and Ukrainian negotiators say they have had productive talks for a peace deal. Special envoy Steve Witkoff heads to Russia this week. Let's take a look at markets now because futures are pulling back this Monday morning. Although we're off our lows of the session, we did manage to eke out 0.1% of a gain for the month of November for the S&P, but we were down 1.6% for the Nasdaq 100. Sentiment clearly fragile, particularly around AI, crypto and other tech areas. Ed Yardeni, though, saying the S&P 500 still on track to hit 7,000 by year-end in a Santa Claus rally, giving productivity gains, healthy earnings and more Fed cuts in store. And now it looks like we're soon going to get the reveal of the new Fed chair nominee. Now that has maybe the longer end slightly higher in terms of the yield curve, with the 10-year yield back up to close to 404 and the 30-year back up to close to 470. We'll see, though. We'll see how the market reacts once we do get an actual name. Let's take a look at some commodities because we are seeing crude oil at almost 2%. OPEC Plus not going to add more production back online. Copper not really moving. Bitcoin down, though, 5% once again, having traded above 90,000 for some of last week. So let's get to some individual movers now on this Monday morning, December 1st. And Chloe Melly. Chloe.
Good morning, Bonnie. We are seeing red across the board this morning for those crypto-related stocks because the Bitcoin prices continue to slide. So this latest drop in prices is related to China's central bank saying on Saturday that the hype and speculation around virtual currencies was resurfacing and therefore it would have to ramp up that crackdown on illegal activities related to that. And therefore we are seeing that weakness across the board there. Moving on to Canadian Solar, which is the solar panel manufacturer. It said that it would be transferring assets, Chinese assets, to Canadian ownership to avoid a growing scrutiny of Chinese imports into the U.S. and safeguard those sales into the U.S. And we're up massively this morning, 18%. And finally, Moderna is seeing a little bit of weakness this morning after a federal judge rejected Moderna's move to dismiss a lawsuit that had accused it of infringing 3 patents related to vaccine delivery technology. And this was related to its COVID-19 vaccine, and therefore we are down more than 3% for Moderna this morning.
All right, we'll keep an eye on those stocks and all that's moving today. Chloe, thank you so much. Chloe Melly there in London. Treasuries steady heading into the new month as investors await next week's Fed decision and the reveal for the new leader at the central bank, or the nominee at least. So what lies in store under a potentially more dovish Fed chair? And will the current FOMC take future potential moves into account in deciding near-term policy? Let's ask Kathy Jones, Chief Fixed Income Strategist at Charles Schwab. Kathy, just on that question, we have an FOMC meeting next week. If we have a name before that meeting, does it change the outcome of that meeting?
Yeah, I'm not sure it changes the outcome, but it might change perception around where we're headed in terms of Fed policy. So presumably whoever is appointed is going to be someone who's going to advocate for more rate cuts, as the president has already indicated. And that could make investors nervous no matter what happens, because it could imply a willingness to tolerate more inflation, and that would probably steepen the yield curve. So I'll be curious to see how the committee deals with this in the statement, or how Fed Chair Powell might deal with it if the name is revealed ahead of time.
You know, we're looking at a December rate cut. Markets are almost fully pricing that in now. Are you sort of in that camp? And what happens then to the 2 to 3 more rate cuts that you see next year?
Yeah, I'm surprised at some of the comments that have come out recently. And I think with Williams, Daly, and presumably perhaps Powell this week, talking about the need for rate cuts, it looks like December is more likely than we had previously thought. You know, at this stage of the game, inflation's still hovering around 3%. The unemployment rate is roughly 4.5%, which is pretty low and fairly stable at this stage of the game. So the case for rate cuts isn't particularly strong. It's in anticipation of a weakening labor market or continued weakness in the labor market. And one could argue that that's more structural than cyclical and won't be addressed by rate cuts. So I'm a little surprised at the dovish tilt, particularly without data. But that being said, if we get a cut in December, that probably means we skip January and we look later in the year for maybe 1 or 2 more rate cuts. But again, without that drop in inflation, it's going to be very difficult for the Fed to justify a lot more rate cuts without igniting inflation expectations.
And yet, there's part of me that thinks that there will be a justification found if that's what the president wants, perhaps, or if that's what Kevin Hassett himself wants, if he becomes the Fed chair, if it is him, if he gets through the process, the confirmation process. I mean, there's a lot of ifs. But what would that portend for the middle of next year onwards? I mean, if we're already at or close to what was now seen as the terminal rate, does that change the terminal rate? Do we suddenly have a new one on our hands?
Well, it's possible. We'll have to look at the summary of economic projections. And remember, this is a committee, so it's not just who's Fed chair that matters. But I will say, and there's going to be some, the annual rotation, there'll be some changes. So it's a little hard to handicap at this stage of the game. But I think if they push the terminal rate even lower in the projections and forecast or project a lot more rate cuts, I think we just steepen the yield curve and we get inflation expectations lifting long-term yields. So it's a little bit of a precarious position to be in, because you can advocate for rate cuts, but without the economic weakness or declining inflation, all you get is a steeper yield curve. And that runs counter to what the administration has said they want, which is lower long-term rates, not short-term rates.
Kathy, on the labour market, do you expect a significant ramp up in, the rate of jobless next year?
No, we don't. What we're seeing is the continuation of this kind of stable what they are, no hire, no fire is the expression everyone's using, a relatively stable unemployment rate. And the reason is that we're shrinking the size of the labor force. So you don't need a lot of job growth in order to maintain the unemployment rate at relatively stable levels. So given the policies on immigration, it looks like we're moving to a structurally lower labor market size, and participation has actually been pretty good. So we could just be in this environment for a longer period of time. And that would indicate, again, not as much need for the Fed to ease, because you can ease policy, but if you don't have the workers in the workforce to take any new jobs, stimulating economic activity would probably just inflate asset prices more, and it might not actually bring the unemployment rate down.
So, Kathy, that doesn't seem too nefarious, right? If we're in this no hire, no fire environment and, we have a dovish Fed, but they're keeping their eye on inflation and so on, what is next for the economy? Because we are going to get productivity gains, it looks like. That's what most people say. Earnings are going to remain healthy. The consumer seems to be holding in there. And if we're not going to get a ramp up in unemployment, is everything hunky-dory next year?
Well, that would be a bold prediction, Bonnie, to say everything's hunky-dory next year. I do think we get a solid growth rate, and that might actually be one of the problems that keeps inflation elevated instead of coming down. And I think that's the big risk. I think there's two big risks. One is this two-tiered economy. So you've got people in the higher income area that are doing just fine. Their asset prices are up, their income's keeping pace with inflation, they're able to spend. And then you have the rest of the world where, although incomes are increasing, they're not keeping up with the sort of average cost of living. Things like transportation, insurance, services are all going up at a faster rate than wages for people at the lower end of the income scale. So you get this divergence where the economy can grow, but you get a good portion of the population just not keeping pace. So you get inflation, but you get more distressed consumers at the lower end. So hunky-dory probably doesn't describe it properly. Probably more volatility with potential inflation is how I would describe it.
All right, that is much better. Thank you so much. Kathy Jones of Charles Schwab, thanks for joining us this morning. Now to other top stories trending on the terminal this morning. New York City will likely have a slick commute tomorrow, Tuesday, while the rest of the Northeast gets a dollop of snow from a storm rising up from the U.S. Gulf Coast. The storm will likely spark travel delays across the region and put more pressure on the U.S. air traffic system, with planes needing to be de-iced and runways kept clear as high winds sweep across the region. UK Prime Minister Keir Starmer is speaking right now, defending Chancellor Rachel Reeves's £26 billion tax hiking budget. Starmer says that the budget reduced cost of living pressures and ensured economic stability. The budget has been poorly received by voters, with criticism that it hiked spending on welfare while increasing taxes on working people. Bank of Japan Governor Kazuo Ueda sent the clearest hint yet that the BOJ board might raise interest rates soon. Traders see about a 76% chance of a hike this month, with the likelihood rising to around 94% for a move by January. Japanese government bonds slumped, with the two-year yield rising to its highest since 2008. The BOJ meets December 19th. Coming up, Ukraine peace talks continue. Secretary of State Marco Rubio says there's still work to be done. More on that next. This is Bloomberg.
New Fed chair, are you any closer on that right now?
I know who I'm going to pick. Yeah.
Oh, tell me, Kevin Hassett.
I'm not telling you.
President Trump teasing about his pick for the next Fed chair after he signaled he wants someone who will more forcefully pursue rate cuts. Bloomberg's Jonathan Tamari joins us now from Washington. Jonathan, the consensus seems to be around Kevin Hassett. Is it a done deal that it's likely to be Kevin Hassett now, and would he get nominated easily?
So it's certainly pointing in that direction. The caveat, as always, with President Trump is that we know he's someone who is not averse to changing his mind at the last minute, to throwing a curveball at the entire country. So we don't know until the announcement is actually made, but things are certainly pointing in that direction. We've seen generally President Trump's nominees get a favorable response from the Senate. Kevin Hassett, someone who's been around a long time, a lot of senators know him. I will say there's been a little bit more independence from Republicans in Congress lately, but I don't think this will be the issue where they probably draw a line. I think if it's Hassett, he probably does get confirmed with Republican support.
Okay, and how long would that process take, Jonathan?
It could take a little while. We know that the nomination is due sometime this month, so we're within weeks, but exactly how long it would take afterwards, I would expect the Senate would move quickly early next year, but they're probably they're scheduled to be out through the last 2 weeks of this year, so it certainly wouldn't happen until January at the soonest.
Okay, so we might get a name and we'd have to wait for that process. Elsewhere, obviously, Ukraine talks are continuing. The US is saying that, there's productive talks going on, but at the same time, the special envoy, Steve Witkoff, is going to Russia, and it does seem like the US is still more in Russia's court on all of this.
Yeah, but this is also, again, like we just talked about on the Fed front, a very fluid process. The president had set a deadline of this past Thursday for Ukraine to agree to this deal, and that deadline was quickly moved. It came and went. We don't know. Russia was in favor of the original draft. We don't know if they'll be in favor of these revisions. So it's still something that is an ongoing negotiation. It's not clear how much closer we are toward an agreement than we were a few weeks ago. It's just maybe the talks have stepped up, but we're waiting. The Russia's response this week could be very telling about whether we're actually closer to a deal or if this is just more of the same.
Yeah, absolutely. This Venezuelan airspace business, Jonathan, do you think it escalates or de-escalates? The president was downplaying the threat, but he did put out on social media that everybody should avoid Venezuelan airspace, that it was effectively closed.
Yeah, and I mean, it seems to be the theme of everything we're talking about. The president, he zigs and zags and he veers, and his policies can change from one day to the next. We know he loves to apply maximum pressure. At the same time as making that threat, he said he spoke to Venezuelan President Maduro this week. So it's unclear exactly where it's all going. I think President Trump likes it that way. And so I think this will be something that could change, not just on a week-to-week basis, but on a day-to-day basis, exactly what his posture is.
Jonathan, thank you so much for all of that context. That is Jonathan Tamari there of Bloomberg Government. Turning to commodities now, because silver is extending a record-breaking rally. Tight supply in obviously expectations for a Fed rate cut helping there. For more, let's bring in Bloomberg's Jack Ryan. Silver just took off, Jack, and it hasn't stopped. And, obviously it has its uses, but why such a huge rally for this particular metal?
Well, I think it's probably for similar reasons why gold has had, the best year since 1979. Silver's done even better. It's almost doubled at this point, year to date. More recently, I think the kind of growing expectation of a Fed cut in December helped silver. Lower rates help precious metals generally. So it's got support on the back of that. And also you have this dynamic particular to silver, which is quite a lot of tightness in the main spot market in London. So earlier this year, lots of metal went to the United States because people were worried about tariffs. They wanted to get their metal there so that it wouldn't be subject to import tariffs. There's still a tariff risk hanging over silver. There's still it's been designated a critical mineral, and there's still a Section 232 report hanging over that. And so for that reason, the London market has loosened somewhat because of the big premium, but there hasn't been enough metal coming into the market. And so that creates more volatility and more possibilities for extreme price moves like we've seen in the last few days.
And of course, as you say, some moved to London, but that also then took it away from other exchanges, right, in Asia and in other places. So, how does the gap get filled?
That's right, yes. The stockpiles that we can see in China, they're down to some of the lows they've been in years. And then we also have this just kind of general background issue where we're heading into our 5th year of supply deficits. We don't mine enough to meet the demand. And silver, unlike gold, a good chunk of silver's demand is for industrial purposes, photovoltaics, electronics, that kind of stuff. So demand has grown and we haven't mined enough to meet that. And so we're pulling on existing supplies. There still is a lot of silver out there. But I think the thing which is preventing the market from kind of resolving itself, and this tightness from resolving itself, is that threat of tariffs, which leaves you with this kind of thin layer of silver in London that's being traded. And then again leads you to massive price moves when you get an inflow of demand like we've seen in the last week or so.
Absolutely, and I just want to point out that copper also hit a record. Jack, thank you so much. That is Bloomberg's Jack Ryan. Turning to the consumer, American shoppers spending more this holiday season with Black Friday sales rising from a year ago. Joining us now is Andrea Felsted, Bloomberg opinion columnist. So we had more spent, Andrea, but was that because of inflation or because consumers were feeling rich?
I think it was more to do with inflation. It was more to do with probably stocking up on essential items. Consumers are very focused on deals. So if there is any opportunity to buy on deal, they will take that. The discounts weren't quite as extensive as last year, particularly in those areas hit by tariffs. So we've had a bit of a standoff, which is why sales are up, but probably when you account for inflation, the volume of goods sold won't be as spectacular as some of the increases.
Exactly. So it's hard to know whether it's, actually a good sign or whether it portends something else. Now, you've also written about Cartier this morning. What does it tell us about the watch market?
Well, Cartier has done a fantastic job in appealing to Gen Z customers with marketing, with the ambassadors, with social media, and Gen Z customers are responding, and it's part of a broader move across the watch industry. For the last decade, watches have been supersizing, but younger consumers are looking for smaller, often gold timepieces with a vintage feel, and Cartier's been at the forefront of that.
Yeah, it's fascinating. Where are they getting the money? I mean, is this a very particular slice of that demographic? Because we're reading that people 25 and under aren't getting jobs in the US, at least.
Exactly. It seems to be where they are spending. They're choosing jewellery and they're choosing watches. We've got to go back to what's happened in the luxury market. Now, leather goods, particularly handbags, have gone up incredibly over the past 5 years. So an entry-level Cartier Panthère in steel is around £3,500. Now, that's not far away from some handbags. So younger people, when they are looking to treat themselves, they're looking for jewellery, they're looking for watches because they seem better value for money than handbags.
And I guess they're delighted by the prospect of not having to dig for their phone every time they want to know the time. It's a fantastic column and very entertaining. Andrea, thank you so much. That is Bloomberg opinion columnist Andrea Felsted. Coming up, we're going to get you set up for your trading week. The 1st of December, we have a host of economic data on deck. This is Bloomberg. Now, a look at what's ahead for the week. We do get ISM manufacturing data coming out at 10 a.m. Eastern, ADP employment data coming out on Wednesday, and we wrap up the week with September PCE numbers and personal income and spending on Friday. We do have Jerome Powell speaking tonight as well in Stanford. Now, the blackout period has started, so he shouldn't say anything about monetary policy, but you bet we'll all be watching. Let's take a look at some pre-market movers. So obviously, crypto-exposed stocks are dropping once again today as Bitcoin tumbles. Remember, we spent some of last week above $90,000 a coin. We're back around 86,000. Moderna extending its decline as a federal judge says the drug maker must face the Northwestern patent suit over the COVID vaccine. And Canadian Solar, well, that's up 16%. It's transferring assets of its Chinese unit to Canadian ownership to safeguard sales into the US, and that's cheering investors this morning. Let's take a look at the macro environment because we have Nasdaq 100 futures pointed to a pretty severe drop at the open. The 10-year yield back up to 404 and crude off its highs, but no more production, says OPEC Plus, coming back online, and that is giving it a bid.